What?
Yeah, it says that now.
Oh, okay, cool. Nice. Right, so how are we all doing? Oh, more people, hang on. That scared me, not gonna lie. Right. Oh my God, Brian's rocking up as well.
Right.
Brian's here.
Man like that.
Brian!
Brian, you got to speak, man.
Brian, come with the sauce.
Howdy, partners.
There he is.
There he is. You got plenty of sauce, man.
Barbecue sauce.
Barbecue sauce.
Yeah.
Ellie knows about barbecue sauce, mate.
Yeah,
I was literally about to say it's the best sauce in the world.
That's like your favourite thing in the world. Couldn't live without your barbecue sauce, could you?
Good stuff.
Well, do you know what though? I had a barbecue tonight and I didn't have any barbecue sauce, so.
Yeah, but it's a different barbecue, isn't it?
Gross.
It's not like, I mean, to be fair, you eat barbecue sauce with like strawberries and stuff. So.
What?
My barbecue tonight actually had flavour, which is why I didn't need the sauce.
Right.
Right, so welcome everyone to the, how many of these have we done now?
A lot, mate.
To the a lot.
For the lot Zoom meetups, yeah.
Yeah, so today we are going to be doing something a little bit different. We are going to be going over your chart markup. So who
wants to go first and get it out of the way with? I like that. I'm on my mobile, so no. Tricky, mate. I reckon you're up for it.
Oh, Andrew. Andrew wants to go first.
Yeah, it was actually a loss I took, which I didn't really get like
cool,
too
man.
much. Like,
yeah, no worries. Dude. Let you share your screen and we can go through it.
Wait, I share my screen?
Yeah, man. Yeah.
I'm sure. Let's see. All right. Okay. Kind of messy.
That's all right.
All right. So it was on GU.
Yep.
Can y'all see my chart?
Yeah. Did perfectly, mate.
Okay, so whenever price got to here, I think this was on Friday.
Yeah.
Yeah. So price got to here on Friday at this area. And basically I thought we were gonna run these highs. And let's see. So when I got to the 1 hour, I woke up from New York and I saw that we had closed above this area right here. So without me realizing that we're kind of in a premium, I came down to the smaller time frame and I looked for buys in here. What do you guys think I could have done better in this situation?
Well, if you look, just go back onto the 1 hour quickly, mate. You see how strongly that reacts as soon as it runs the highs, right? It just never closes above it, massive wick, rallies down, creates equal lows before, hold on a minute. Can I annotate? Yeah. It creates equal lows here. So I would have been hesitant at that point because you've just run all of this liquidity, right? You run this liquidity, you've obviously reacted very strongly to that liquidity. You're right at very high prices, right? There's plenty of unmitigated stuff all the way down here. These are relative equals as well. Like much better to be looking, just wait for the pullback, mate. Like at that point, personally, I'd be looking to short it.
Because I thought this was a higher low, to be honest, based on like the 4 hour, because I thought we were going to continue like bullish momentum. And
but you're making assumptions there, right?
Yeah, honestly, yeah.
Which don't assume, like react.
Especially like right here, because I just watched one of y'all Zoom videos and y'all like there was no inducement at this area. So now I see like, you know, why this could have been wrong as well.
Yeah, exactly, mate. It's just like it's not. The idea is valid to agree. That's why it had a reaction, right? It's because it was a valid area of demand, definitely, right?
Yeah.
But the intentions at that price were for lower prices.
I see that. Yeah, I see that.
Yeah.
All right. Yeah, that was my question. Appreciate y'all, man.
Reaction, right? If you ever get a high form like that, generally it's not going to be run straight away. Often not. If it's right at like never closes above, right at the very edge, right at the highest price it's been for.
So if I was looking like the 4 hour and I saw like, oh, okay, so it didn't close above, I'm like, would that be like a sign like maybe we could be seeing lower prices this day?
Yeah, like absolutely. To potentially come back down to here or perhaps even lower, man. You know, like doesn't.
Yeah, I see that now.
Also see on here that once we've printed this high substructure, you can see that we're starting to make lower lows, very small.
That's Brad, isn't it?
Yeah, that's Brad.
Who's watching content?
I was like, wait, what?
All
right, guys. Yeah, that's pretty much that was my confusion about that. But thanks for the clarity on that for sure.
No worries, man.
No worries, man.
All right, definitely.
Could you go over what happened on EU? Well, what do you want to go over, mate? It's about going over stuff that you saw. So
yeah, so we can help you like from learning from, you know, don't be scared to bring up a chart, whether you took hits, got it wrong, whatever. That's how we're going to learn. And that's the whole point in doing this call, is to show you what we would see, how we would have seen it. And obviously for everyone else, because people might have the same question that they're maybe don't want to ask or whatever. It'd be good to get a chart up and go through it. Or whoever wants to go next, just feel free to share your screen. It's open to anyone.
Yeah, I've got a chart that I'd like to share.
Yeah, sure, man.
All right. Let me see if I can pull it up real quick.
Should let you. Yeah.
All right, can you guys see that?
Yeah, man.
Okay. So this was yesterday on EU. And I think
about these ones, didn't you? We had a bit of a chat about this in
we did.
Thingy, right?
Yes.
So, yeah, cool. Well, so what do you want to know about this specifically?
Well, so I see down here, I definitely understand what I saw wrong here, because I think I was looking at this kind of doji as the SD, but it was really this.
Yeah.
So I just had my limit order in the wrong place.
Right? But this would have happened on the second time frame. There's going to be like some wicks, like a buy to sell in there, right?
Okay.
Comes in, reacts, fails to create a lower low, pushes out, comes back, mitigates and continues, then reacts to the very last level of supply here, right? Pulls back, mitigates again, pushes up, no mitigation until here, which continues.
Yes. Okay. Yeah, totally. So I do get that one. This one that I was looking at, we had so my initial bias was overall sells, right? But I was expecting price to come up to this 15-minute POI here. So I was looking for more continuations up to that point. And so here I saw that we had a 5-minute demand zone. And we had this right here where it reacted to it and then broke.
Just go on 5-minute quickly.
Yeah, right here.
Yes, it is demand. Is it strong enough to be taking counter trend or counter momentum trades like that? Like this,
For me, I would be looking more at the one at the 15 MPOI at the bottom. When you get a change in character on the 1M, you can play that for the pullback, right? But as you come back into essentially the premium of that leg, you don't really want to buy because you are against trend massively. So I wouldn't be looking for buys unless we went and broke that structure to the left.
Like here you're saying
if we started to take these levels out, then maybe you can of course, you know, look. But what you got to remember is once we come in here, right, we took this low, we took this high on a 1M, and there would have been an entry here with a change in character off of this mitigation to play the pullback back into, you know, essentially the premium of this leg. But then I would be more inclined to how we develop, and obviously looking for shorts to look at this low getting run because it's not done its job.
Okay, so you're saying that the further we get up this leg, essentially the riskier it is going to be to play these continuations.
You're going counter momentum,
right?
And obviously, like for me, if you know, obviously 15-minute is what I try and follow the most, and obviously the 15M still showing, you know, that bearish intent. So you can happily play this reaction and this mitigation, by all means you can play the long, but you want to be playing it pretty close as you start to get higher up. If you haven't caught this, I wouldn't be looking to take it personally.
I got you. Yeah, that makes sense. Okay. Yep, I'm with you. All right. So this is really the piece. Going back, sorry. All right. So this is where I really kind of I get confused, I guess, because price is moving pretty clean and it's moving well. And now my bias is bearish here. So I saw that we broke the 5-minute demand, and I took this right here as this is the last push before we broke this structure here. And so I set my limit order here, expecting continuations down, and I got stopped out, but overall I was right.
Right, yeah. I mean, so with this one for me, right, like if I don't know this, like, so here we break that 5-minute demand, right? So we can say this is the break structure, breaks the high here, break structure here, right? So initially, this is what you should be looking at, not this, right?
Okay.
But this doesn't really, like, remember I said this doesn't really come in and mitigate anything. So there's no sort of switch, there's no flip there, right? So now for me, I'm thinking, all right, well, we have this unmitigated wick up here. We have this unmitigated here. This is all at the lower part of this leg. I wouldn't be playing that personally. Like, just because I'd be expecting it to come back a bit higher. You know, like normally when we break structure, it's not like, obviously it's not a hard and fast rule like anything in trading, right? But normally when we break structure, we pull back up to beyond the break of structure, right? Like we get a break, then we pull back above the break to mitigate something that caused the break to then fall down.
Okay.
Yeah.
Okay. So when you said this didn't mitigate anything, what do you mean by that exactly? You're
just comes in, this wick here just comes into this like random bit of imbalance, right?
Yeah.
At the top of this range.
Okay.
So it doesn't, this is just like a reaction to liquidity basically here, right? That's a little pullback because of the liquidity, right? It's not that exchange between supply and demand. It doesn't, like, it's not taking out an area of demand, right? This specific thing here, right? Because it's not reacting to an area of demand.
Oh, I see what you're saying. Essentially, this up here is what took out this demand. Yeah. Okay, I see. I see what you're saying. Okay. Yeah, because I think I was just looking at this as like this pushed down to create another low. So that's
but this is where you need to be a bit careful with 1M, mate. Like,
it can.
Yeah. 1M, you need to be reasonable with it. Do you know what I mean? You need to be like, it's not like the same, you know, we're not saying this is like a 1 hour POI, you know, where potentially, we could look to trade from that.
Sure.
Like, this is like 1M, so, you know, you're going to get a lot of false positives in it.
Yeah. Okay. And would you say this next one is pretty similar in that way? Like,
well, again, here, right, we've got the break of structure comes from here, right? This, I think did you change data or not? Because on your chart, that didn't close below, did it? I don't think that never closed below here.
Oh, that's the one you were talking about that didn't close.
Yeah, exactly, right? So we haven't got a new lower high here, right? So you're not playing the lower high, you're playing the inducement for this.
Yeah, okay.
Which means you're 9 times out of 10 going to get stopped.
Okay. So are you always looking for that close below?
Not always, but with that particular thing, like with that trade, yes, I would have. Like I would have said, all right, if this closes below, then we've got a new lower high, right? Because we're playing the continuation, right? So you want to, like, the idea with continuations is that you're trading like that, right? You're trying to catch that, you're trying to catch that, right? Whereas this, we don't get that. Here we get like that. Right, so you're trying to catch that, which could just be a level of inducement for that.
Okay. Yep. I see what you're saying.
Yeah.
Okay. Awesome. Thanks a lot, guys. That helps a lot.
Dude.
No worries at all.
No worries at all, mate. Thanks for sharing, dude.
Yeah. Right. Cool. We've got iPhone and Tatiana. iPhone, I do not know who it is.
Guess an iPhone can't share because they're on a phone. Tatiana, if you want to share, feel free to pull up a chart.
Yeah, go on, girl gang.
Need me to accept you again? Yeah, that's fine. If you need to leave and come back, I can let you in. It's cool.
Does anyone else want to share?
For me, there's more clarity that I require on buys to sell, sell to buys, that sort of thing. I can pull up a chart if you want.
Yeah, please, mate. What you need?
Hey everyone, sorry to interrupt. How are you? You good? I just raised my hand because Brian was asking for us to raise my hand, so it's not that I wanted to share. I could share my screen anyway, but I was just raising my hand because Brian asked us.
Oh, okay.
Sorry, you can drop your hand if you don't intend to share. You can drop your hands, but going forward, just
Yeah, I can drop my hand. Sorry, I didn't know I could drop my hand.
All right. Just going forward, anybody, just to streamline stuff. If you do want to share something, just raise your hand so that way we can keep going through it. But
yeah,
yeah, cool.
Yeah.
So okay.
Oh, sorry.
So if you're able to accept me again, I would like to show some doubts that I had today. So
yeah,
but
sure. Feel free.
I'm actually at my tablet right now, so I would need to enter again. Is that okay?
That's fine. Yeah, if you leave, I'll let you back in. It's fine.
No, he won't. He's lying.
What?
Yeah. So just to go over that, like sell to buy to sell. It's just like essentially it's an order book, mate. It's like a sell to buy range, right? Like we get, like any order block should be a buy before a sell or a sell before a buy, right?
Like this.
So,
yeah, sell to buy, you trade that. Buy to sell, you trade this, right? So if you're looking at it on the examples, like hitting.
Yeah, I'm more trying to liquidity hunt as well with it. So I understand that the concept of following the money and everything's built around liquidity. So the market creates loads of liquidity to either dupe the dumb money in, but obviously we try to be clever to know where either 50% of it the order block is. So when you say buy to sell, sell to buy, and it's mainly centered around the FU candles and the full body candles. So today, I don't know if Tatiana's going to present or whatnot, so I can kind of see.
She's left. If you want to put a chart up, mate, pull a chart up. It'd be much easier if you've got an example.
All right, let me just see if I've got. So, can you see it?
Pardon?
Can you see my screen?
No. You need to click share at the bottom, mate. Click the green button that says share screen, and then it'll pull it up.
I've done that. Is it pull up now?
It's coming slowly, I think. Yeah, it's a bit of a delay. There you go. It's coming up, yeah.
All right, cool. So yeah, I'm trying to trade it on the 15-minute as well. Like I said, I'll be. So here, so to this point here, I can see that liquidity is being built up in the market. So this is cause for it to, push up, take it out, and then push up from there or whatnot. So when you were saying, I saw your video, Sam, as well. So your FU kind of candle, would this be classed as one? So that candle there?
Not on a 15-minute perspective, maybe.
So much.
No, I'm down on the 1 minute now.
Yeah, no.
You're talking about this being an FU. No, that I wouldn't class that as an FU, mate, personally. It doesn't take out anything. This would be an FU, right?
Yeah,
this takes out those and then breaks. That's your FU.
So then if you're looking at this one as the FU, you would see that to break structure, come back down to this level here and then take off.
Not necessarily come back down to here. No, I would have expected that. Yeah.
If you've got this, when you've had this mitigation, right, you've taken this low along with these lows, you've taken this high, so you've had a change in character. What took the high was this, so that would be my play.
Yeah.
Aware that this not mitigated to the EQ, so yes, price could come back. For now, I'd be interested in this. This is what's caused that change in character. So you've obviously been, you've been doing like this, low, 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 high. That's taken it out. You've took the low. You've come back in. There's your mitigation. Off you go. Like here.
And why that candle?
This is responsible. This level here is responsible for breaking this level here.
Right. Okay. Cool.
Taking that low, taking that high, like, especially on like when you're coming in and having that high time frame mitigation. You got your high time frame narrative built, and obviously you've swept liquidity here. For me, this is like A+ high priority stuff. I'll take that. If that doesn't work, I'm happy to take the one below it. But for me, this is the candle that's responsible for that change in character and breaking that lower high. So I'd play that one for the long.
Right. Okay, that's fine. And then like, would you just trail it on the 1 minute, knowing that, okay, this is the overall direction of the market moving this way?
Yeah, I'd be aware of, obviously this is pro trend. I'd be aware of what's left always. I think there was a M30 supply and an M15 supply. So I'd be maybe trading into that with the, insight that we could get a reaction.
Right.
And then it would just be a case of following the mitigations on the 1M. And then obviously, when we get up here, again, not the cleanest by any means, but you'll see how, you take these highs, you take this low, there's one entry, or you've got this doji here. It's just, now you're just seeing that constant order flow coming into the market.
Yeah, that's what I was talking about. So it's this candle here that I'm looking at right here. So that would be an FU in your example.
No, an FU's got liquidity, dude. Like it's got so if you've got say you've got, that's really bad drawing. There you go, Brian just drew it. If you've got like equal highs, equal lows, with some form of liquidity, and then it takes that liquidity, purging the liquidity, then you get a reaction, literally like he's drawing. That for me is an FU. This wouldn't be an FU. This is just simply, you're literally seeing buy to sell, mitigation to mitigation to mitigation, and you're seeing it off of a higher time frame mitigation, so you can play that logic short.
Right.
Obviously, on the understanding, you're counter trend to the overall direction of the market, but you can play that back into levels that need mitigations. Obviously, this was no mitigation. With this whole sell to buy here will be a higher time frame mitigation. This mitigation down here. So you're just playing that intention from up here, but you need to be mindful in your head that you've got, demand levels that you might react off. So, don't marry yourself to shorts only. So obviously pro trend was low.
No, but this is what I mean. So you're kind of following the money up and down, kind of in a sense.
Yeah, like understanding. I'll be aware of, obviously higher time frame where we are, directional bias, usually following the 4 hour and 15 minute. But once we come into a higher time frame supply or demand, if we show that change in character like we did there, I'll take shorts all day.
Right. Okay.
It's something to observe. Like you'll see it happen. Most higher time frame mitigations will give you that change in character. They'll take out the high, they'll take out the low, and that'll be your first entry. Now you don't have to take the first one, but then you'll start to see order flow creep in, and that's where obviously there's an opportunity to get in. Does that make sense?
Yeah. Okay. All right. Cool. That's fine.
No worries, hey, I'll be.
All right. Tatiana's up next.
Yeah, Tatiana's going next.
Okay, so 1 second, I'm trying to share. So basically what I'm going to share now, it's just hope it's not very confusing. So we were like in a range. We just tapped on an order on a daily order block. We didn't reach the one above, and for me actually it's quite difficult to predict or try to see if the expectational order flow is going to tap the daily order block above, or if it's going to mitigate something lower and then go up to the weekly order block. But anyway, we were inside like a range in the 1 hour. So today I was trying to get trades from that range, right? Please correct me if I say anything wrong.
Yeah, sure, no worries.
Yeah, so in that case, I went to the 15 minutes and to the 10 minutes and 5 minutes to see what was going on. And then I saw that we were reacting to this morning, that we were reacting to this demand zone on the 10 minutes. Yeah. And so this is where my day started. Probably going to say that I spend too much time on the 1 minute, and you're right. Yes. So what I start doing is I wasn't at the charts on this trade, but I was something that I'm seeing now, that is every time we fail to create a lower low, and every time we repeat to fail to create those lower lows or those highs, if you are in a bullish trend, normally it leads us to a change of character, right?
Yeah.
So I saw that there was a good opportunity here. Then I wanted to get some longs. What happened during this morning is I had lots of supply zones here that either I was expecting for a pullback
Yeah.
Right. Or a reaction to then look for shorts, right? Because what I since last week we were creating all this very strong bearish order flow.
Yeah.
I was thinking that probably during the process we were going to react at one of these supply zones,
Yeah.
and then continue with a bearish order flow. And that didn't happen today, right?
Yeah.
So I took some losses between the process, because either I wanted to get to the long on the wrong times, or either I wanted to get to the bearish again on the wrong side.
Yeah.
So basically what I wanted for you guys to help me out is where would I choose? I know this is one time frame, and I don't know if this is a proper question for now, but like I'm trying to put as many ranges as I can to see where price is going to react, and to study, of course. I didn't took all of these trades, of course. I'm just putting them to see what we can see if it's coming, right? So basically this morning we didn't tap on the 5 minutes. So my question is that enough reason to don't look for shorts when we have such an aggressive movement like this?
So, like, for me this morning personally, like, it wasn't the cleanest. Like, I came to the chart, saw it, didn't like it, so I wasn't trading. But like, this comes into a 10-minute to the left. Obviously we take out all this liquidity, and then when we go on the 15-minute, we can see that, you know, as this pulls back, it failed to break proper 15-minute structure, right? So I'm always sort of following 4-hour 15-minute. Now for me, the 4-hour, obviously, you know, we're still bullish. So I'm expecting higher highs. We were seeing, you know, bullish intentions. This for me was just a liquidity grab. Once we came back to this level, obviously that's out my trading hours. But once we came back, I was more looking for longs, trying not to play, you know, every area. Like, what I've found is if you mark too many supply and demand levels out, it gives you a bias straight away to, oh, I've got to sell when it gets here, I've got to buy when it gets here. I try and keep it, you know, relatively clean, focusing on mainly the 15-minute, 30-minute and above. What I will say is when we're bullish, you know, back in the bullish trend, you know, once this level's going here, and that's a really bad line. But yeah, once this level's going here, and we're confirming we're back bullish, I'm not going to start looking for shorts until we sort of get towards an absolute extreme level, just because you're fighting momentum. And, you know, again, today was quite range bound. We wasn't exactly, you know, like EU, when it trends, it starts to trend and you can see the momentum kicking in. We didn't really get that today until sort of late New York. And I think it's one of those things where, you know, when you see PA like that, you need to be able to take a step back and not kind of get drawn into everything, which is where going up time frames, 5-minute, 15-minute will help you. You know, where we got some sort of reactions earlier, you know, we came into this level above. There was a short that I took here, which I played back into this 5-minute, this whole level here. So you had these two 5 minutes, this tapped the top, then we pushed, we came into this, we took this high out here, and then I saw this low, fail here. I also saw a slight high and low fail there. So you could have played that short off of this higher time frame mitigation. But of course, you need to be aware that you're literally playing a counter trend, you know, in a bullish market. So you don't have to take this trade. I played it back into this 5-minute and took the hedge. Sorry, this 5-minute here. And I took this hedge long. Once I identified again that we was in this massive range, I just BE'd both trades, actually took BE on both trades and just sat out because it wasn't going anywhere. And when you trade in a range, unless you're trading the edges, which even still, you know, is not the best, you're just going to get caught out in loads of rubbish. So sometimes, you know, it's not always brilliant. And I think something that even I'm still trying to get to grips with, but identifying that, right, price action is not the best, it's not doing what we want it to do, so I'm going to sit out and just watch, is sometimes the best thing. And then do your markup at the end of the day. And obviously I know it's in hindsight, but it helps you to identify those days where you don't want to partake and essentially give money back to the market. Obviously there was some nice trades from, you know, this point onwards down here. Oh, my pen's gone, hang from here onwards, these were very nice. And obviously this higher time frame mitigation, definitely play those. But the other ones for me were just, when you're bullish, just try and follow that intention. Try not to go bearish and basically fight momentum, because I found that it would just hurt you a lot. Unless you're at the extreme, you know, if you're coming up to this level up here, which was a 30-minute, and you're at the extreme of the highs, by all means, if it shows you like a change in character, you can take shorts. Yeah. Does that help?
Nice. Yeah. Of course. Just one more question, Ali. Like, sometimes what we see, like, is but then again, this is all in the 1 minute, and maybe it's not like the best solution. But when we see price tapping on a higher time frame order block, would you continue with the mitigations until the change of character, or would you step back because you know you reached a point of interest?
I usually, if it's a strong level, you know, 15 and above, usually I won't be buying or selling into it. I'll just sort of wait, because the thing is, right, with this style, there's so much on offer, right? We don't need to take anywhere near all the trades that sometimes we try to take, right? You literally need like a 5R a day, if that. So if I'm up, you know, a 5 or 10R and I'm approaching a level, rather than trying to chase to get more, I'll just let it develop. You know, if it's like this trade here, you know, makes complete sense. You know, you're following the bullish intentions, but from what I'm aware, I think with a 2-pip stop, it probably didn't, I don't think it reached 5R. You know, they're the ones where after that, you're going to get a change of character. You could question, well, should I be buying into this at that level? If you've missed sort of, you know, 1, 2, 3, I tend to find with EU, when you get a direction, you know, a momentum going, you'll get between 1 to 3 really nice moves. The 4th and 5th tend to be the one that, if you haven't caught 1 to 3, you don't want to take 4 and 5, because it's just your FOMO sort of making you go, I've got to get 5R, I've got to chase it. You'll play into this, it'll take you out on the change of character, and then we go bearish. Then you fix to only selling, and then we'll probably come down to a higher time frame mitigation again and continue the bullish trend. So it's really important to make sure that you understand when you're playing that pullback and when you're playing that pro trend. And yeah, for me personally, I don't like playing aggressively into supply and demand zones.
Okay, so when you're getting closer, right?
Yeah. Once we're starting it, like this level is a great example. Once we're coming up into this, that I had marked as a 15 and 30. I'm not looking to take these unless I know I can get 1 to 5, for instance, just before the open. Then maybe I'll do it. But if it's like right in the middle or above, I'd rather just not bother. Or if you are doing that and you're in profit here, you need to make sure you catch the hedge. And then that way you're positioned on both sides of the market. If that helps.
Yes. One more question, Alvin. The last one. Would you rather take, like, based on what we've talked and all that, like, would you rather take 3 5R in a row, mitigation after mitigation after mitigation, or would you stay with the trade open and see until an important order block is reached, for instance?
If the level I'm getting in is, you know, a strong level, and essentially it's at a cheap price. So, you know, this long here is a great example. You know, we've come in, we've had our last 5M mitigation, essentially. If we're following that bullish intention and order flow, this should, you know, hold. So if I'm getting in here, I may play this the next strong supply, you know, and take profits on it, but I will also follow on the 5 still if I want to. So if for some reason it gets here and reverses, I don't end up with just a break even. You know, I've caught a continuation. But all my continuations like this, I'm sort of 1 to 5 and I get out. It's only the ones that I'm getting in at, you know, strong levels that I'll look to hold to the next demand zone.
Right.
But again, that's personal preference. You know, you don't have to do it that way.
Of course. Yeah, I just asking. Sorry, I have one more. By the way, like, did you ever did a test like this where you would enter or on any important range that you see and see how you get on the end of the day? Or do you think that that's too much work and it doesn't?
I think it can do. I think sometimes if you put everything on, obviously you still want to identify the good trades from the bad trades. You want to make sure that, you know, ideally the ones that are very valid and high probability normally have the same characteristics. You know, they'll come into a higher time frame mitigation, they'll change character. they'll be with the trend, and then you can obviously follow the continuations from like the supply and demand stuff. For me, I try and mark up the ones that work, that are the most valid, and then I obviously have a folder of those that I'm always looking over every night to try and, like I say, I'm very confident with EU now, where when I see it do something, I've seen it so many times, I'm like, oh, it's doing the same thing, so I'm happy to take that position. Obviously sometimes I'm wrong still, I get it wrong quite a lot. I'm not perfect at all, but it's also having that mindset to know that it's going to happen, you're going to take hits, but you can't be attached to whether you win or lose. You just need to focus on the outcome and the process. And with this edge, you only need to be right half the time. As long as you're taking valid, correct setups, you only need to be right 50% of the time to make money. So, personally, I try not to mark out everything. I try and mark out the stuff that generally is, truly valid. And then I do a higher time frame markup to sort of identify why it's valid and why it works. And then, like I say, the more data you gather on it, you'll start to see that it's pretty much the same stuff every day.
Okay.
Yeah.
So, sorry, I'm really just going to ask one more thing, and I don't know if.
Hey, Tatiana, let's we're gonna have to move on just to keep it fair for everybody else.
Okay. Sorry.
No, these are all great questions. We just we gotta walk the fine line of
sure,
a full one-to-one session versus everything else. So let's move on to Hensley next. Top shagger.
Oh no, not Hensley.
Why did we let him in now?
Why is he here?
Yes, the boys.
Here he is.
How are we doing?
Welcome.
Not bad, bro. You?
Yeah, I'm good. You pretty much just answered one of the losses in Italy Island, then I think.
Oh, come on, mate. Get the chart up.
Can you see it?
No, it's loaded, mate. There you go.
It's that one, which I think you said was too far up the leg, wasn't it?
Just the higher time frame mitigation, dude. Like if you've got, I know obviously we're bullish, and like you're playing the intention, like completely makes sense, right? But it's just like, what is this coming into? Obviously being at the high as well, you're likely to expect a reaction from an unmitigated level. The minute you see that sort of change character, if you can't catch the shorts, this one's always a little bit iffy, just because you've got liquidity underneath you, you've got unmitigated zones. It's very likely this can pull back. So like I always say, you're always in between two higher time frame mitigations. Obviously you've played the intention off this one to the left, and then you've got this one to the left. So up here, for me, like I say, if you miss 1, 2, essentially maybe 3, you don't really want to catch this one unless you're in short.
Yeah.
It's not like it's a wrong trade. Like the whole logic makes sense. It's just that I've noticed that the higher up we get, until she's like absolutely ripping out the sky, and you can get really aggressive. Even then, unless I've got something on the board with it, you won't catch me taking the ones higher up, because they're normally the ones that do like that.
And then the other one was, I think you've seen that one as well, didn't you, on Discord?
Which one, dude?
Yeah, this one here. I remember that, mate. You were saying you took it from here, right?
One, yeah.
Yeah, I mean, again, mate, that it's got unmitigated stuff below. It's created liquidity. It does, that one to me makes more sense than this one, personally. I'd rather be taking this. I mean, I would have used that. And the other thing is, right, like for me, I would, as soon as this breaks that, right, you can see the reaction's pretty poor. Just get your risk off, mate.
Yeah.
Like, you don't need to hold it. If that breaks that and then like starts failing again, it's probably only going one way at that point in time.
Well, so once it brought that move to break even up,
it should, right? If it's going to react properly, this should just come down here, do that, and then pop.
Yeah.
Right? Then struggle again up here, create another range, create another engulfing candle, which essentially formed another order block that's taken liquidity and will most likely now break structure.
Yeah.
Right. Yeah.
Right. So it's just about like I know everyone has rules around like boss or this or that or the other, right? But it's reacting to what price is doing at that point in time as well. Like even here, mate, personally with this, I get this one, right? Like, but once you see this and once you see this reaction, just go to break even, mate.
Yeah.
If
Yeah, I
it's,
did on that one.
it's going to take you out. Hey ho.
Even look to hedge it. Like you see where it pushed up and you've got that doji that's not mitigated. Look to hit sell, mate. Take a short. Because then at the end of the day, you've got it trapped. You're in a good position. One way or the other, getting both to BE, one's going to pay you.
Yeah, yeah.
I know it's quite like, it feels weird and sometimes it is a bit odd hedging, but like rather than getting, stuck to that bias, be like, look, I'm in this, if it does blow through the sell, whatever. But at least if the sell, like today, the sell, took control off that higher time frame mitigation, you still make something on it.
Yeah, yeah.
That makes sense. It's not like you're doing random stuff. Like the other one makes sense. It's coming off a 5M mitigation. It makes, it makes complete sense.
Right.
Yeah, they're they're logical, mate. It's just like when they're not at like primo levels and the reaction isn't brilliant, maybe just get your risk off.
Yeah. I did that with the second one.
Yeah.
I went for break even on that one. When we had that push away.
Best way, mate. Do that. And if you can get a hedge, like I say, try not to be obsessed with, like, it's hard, but try not to have that bias. Like, hang on a minute. What have we just come into? What have we just done? Oh, we're in a higher time for mitigation. This could react. So I'll take a short too. Then that way you're positioned really well. Do you know what I mean? One of them's gonna hit 5R. You've got quite a distance between them. So it's not like you're doing it in the space of 2 pips or whatever.
Yeah. Right. Yeah, that was it. I only took them 2 today, mate.
No worries, mate. It's all good, mate. It wasn't the greatest day, but
No, it wasn't.
Move, bruv.
Who's next? Leon? Brian,
How you doing, guys?
Hey, mate, you're right.
How you doing, brother?
You bad, you?
Good.
I've just talked about this with you about 20 minutes ago, Sam, but I wouldn't mind just going through it now, if you're all right with that.
Yeah, of course, mate.
Oh, fuck, better not share
Don't share.
that. You see my screen all right, yeah?
Yeah, you were talking about this one up here, weren't you?
Yeah, so at the minute we're on 5 minutes, so broke 5 minute and 15-minute substructure. So I'd identified 2 order blocks, this one here, and this bottom one. So this one over here didn't work.
Yeah, again, that's like I said, like that one there for me, right? If I'm gonna play, like knowing that we're coming off that 15-minute up there, right? And we're seeing an aggressive push, right? Yet we do tap into a 5M and we do get that change of character, right? But like I said, this one doesn't really mitigate anything like specific, right? It just mitigates thin air within the thingamajig, within the
5 minute
block, right? So like this one again, and once you start seeing this reaction, this change of character back here takes this little high, takes this little low, and you start seeing this, and again, like so really if we're looking at what this should admit, like what it's going to come off, it's probably going to come off this, right? Like because this reacts to up here, this pushes down. As soon as you see this is then starting to say to me that this probably isn't going to work,
Okay.
I get it, like I get the idea again, sweeps liquidity, etc. But yeah, it's just like notice the details, right? Like if this had come down and mitigated like this, right? And then you've probably got a bit of a different story on your hands, because you've got that really, you've got that essentially that really refined mitigation, right? But here, this can still we need to be aware that this can still come down lower into this can still come down lower into this can still come down lower into this unmitigated wick, so just be that little bit more cautious, man.
So no, cheers, man. So on this one actually, and the reason why this one is one is because I didn't put this one on, and the reason that was is because I did put that one on. But that said, this POI, this 5 minute POI at the bottom, I guess, is strong because it sweeps liquidity, it's unmitigated, and it mitigates this inside bar that broke supply itself.
Yeah, exactly.
It's order flow, it's the last mitigation essentially. So yeah, man.
No worries. Spot on. Thanks for that, guys.
No worries, man.
It's all right. Thanks for sharing, dude.
Miguel.
Hi.
Hey, what's going on?
First of all, sorry for my English. I'm Portuguese.
Don't be silly, man. It's all good.
Portuguese, mate.
I'm going to share. It's to talk about an entry that I'm in EU since Friday.
Sure, mate.
Friday, nice. Good man.
Okay, this one.
Yeah.
I entered here from this point.
Yeah.
And right now, on the 15 minutes, I have my stop loss here.
Yeah.
Yeah.
Because,
I don't trail my stops, mate, so I'm not the best person to ask about that.
No, my doubt was because I have some lows here that they might be swept.
Yeah.
So that's why I was asking if this was okay, or it's better to put him down here, because I have in 5 minutes I have this one here that can serve as a point of interest.
Yeah.
That provoke this break of structure.
Yeah.
And put it right here.
I mean, it's more of a self-preference sort of thing, to be honest, because I don't want to tell you where to put it and it take you out and you lose money. I don't know when it's gonna come to you, man. Like, what you have to remember is obviously your entry is pretty solid, right? Like, you're at the bottom of this move. So, you know, if it's to continue and start putting in higher highs, you know, on like 4-hour perspectives and stuff, you should be fine. But we have had
this 4-hour supply zone.
Yeah, we have had a mitigation of the higher time frame at the top right at the moment, right, which caused that sell. You know, and of course we've got some liquidity under your entry, but if you look too much into it, you're not gonna, you know, you'll get put off by everything. So it depends on what you naturally would do. I would say is what I would do on that. Have you got anything off the trade? Have you got any partials or anything?
No, not yet.
So I'd probably look at taking a partial and leave my stop where it is personally. Okay. I don't trail my stops either, to be honest. So I'd pay myself, like, make sure you earn something from it, and then, you know, leave your stop open or put your stop at break even. But make sure you take money from the trade.
Okay. Look at can you go to the 4 hour?
Because I have some difficulties in managing my trades, and that's where I lose some money.
You might have caught the 4-hour high low, man. So, you know, it may well break the 4-hour high.
Yeah.
Miguel, go to the 4 hour real quick.
Here.
Yeah, and just look a little bit left, but keep current price in picture. I just want you to look at something. So one thing that you'll notice is that every time price hit major supply, right, we got a complex pullback, but it continued with expectational order flow, right? There's what you can see here as well is just we've hit supply. Well, that's not a very good drawing, but there's some. Jesus, I can't draw straight. Anything. Anyways, lines, all these levels hit supply, right? And then this one was a little bit of an outlier because it came out, it took liquidity here before it continued upward. But one of the things that you'll kind of notice is that you tend to get a range or a complex pullback before price continues higher.
Yeah.
And with expectational order flow, right, you're continuing to break the potential highs. Now we have an extreme down here that price could potentially come into, but if you look at previous price, you can see that all the extremes don't get tapped before they actually run higher, right? Exactly. So those are for future price, right? So there's a very good chance that this is for future price. The only thing that we have to keep in mind is that, you know, expectational order flow would say that we should expect higher highs. This supply zone gave us a pullback.
Another 4-hour supply.
Yeah, and this is a really strong one as well. It takes out liquidity, breaks structure to the downside and all that. So I think that's all valid to expect higher highs. I think one thing to understand as well is that you've attempted to break this current high already once and currently potentially a third time, which is actually building liquidity to target to the upside. The only thing that I've got caution on is that, like Albert said, we have liquidity to the downside as well. And if you look at the previous pullbacks, right, you can see here, right, equal lows, sweep of liquidity, then break of structure, trend line liquidity, sweep of liquidity, and then the break of structure. The only different one here really is this guy. It doesn't sweep liquidity before breaking the structure. And then you can see once it hits the supply that's in here, it uses that to target. And then you get a shift in momentum and price comes back to test this and then it goes up. But the idea is that You have weak highs. Expectation overflow would say continue higher. You've got a very good position. There's just that one downside. You have liquidity here. So, you know, like Albert said, it is totally personal preference, but you're up what, 20R, 22R?
At the moment, 10R, more or less,
Okay.
I think.
Oh,
But
you're trading
it's-
half
but
percent. And
at the moment, yes, 14.
about 15. Okay. It's a pretty good trade. It's a really good trade. So, you know, like, don't be afraid to pay yourself because there's opportunities all the time.
Okay.
You know, but at the same time, you know, make sure you manage risk properly. Don't let it break you even. That's for sure.
Okay.
Yeah.
Perfect. Thank you.
Yep.
All right, mate.
Who is next? Henry.
Henry.
Right. Thank you very much. I'll just share my screen now.
Henry or is it Henry?
Oh, it doesn't matter, honestly. I guess you're from UK, so you can say Henry. I'll give it to you.
Okay.
but if you're French, you can say Henri.
Well,
Okay,
I sort of am an Arsenal fan. So
I'm an Arsenal fan, so I'm gonna say Henry, mate.
I don't really want to admit that, but yeah.
It's better than Chelsea.
So yeah, so basically that was probably like that's what happened on Friday. Didn't really want to take price action from today, but more from like Friday. It was cleaner. So I guess like here we were sweeping some. So I wanted to go over these trades here. So we were sweeping some good equal highs here. One nice liquidity trend line, which really created that impulsive move down in kind of like in alignment with the expeditional order flow that is bearish. And I had a few questions about maybe to LB Sketchy and of course like Brian, like Blackwatch and other coaches. When you guys trade, for example, like impulsive movements like during the New York session, London session, do you like to wait for kind of like higher time frame major liquidity sweeps so that you can have some one step, like you can be one step ahead and being able to trade like large move downs? Do you always wait for some form as well of like 5-minute break of structure? For example, here we were reaching that like area here and sweeping the higher like higher time frame liquidity, and then we had like a minus break of structure and then another substructure. So I didn't take that trade. I just took like this one here. No, actually this one there, because I wanted to wait for SBOS and MBOS. But like, yeah, my question is more like, do you necessarily wait for 5-minute break of structure when you're already sweeping some major higher time frame liquidity, or do you already enter in some like?
So for me, that depends whether it's pro or counter, mate. Like if you go on the 4-hour quickly, let me have a look at the 4-hour. I haven't looked at AU in a long time. At that point, I would have just waited for a 1-minute boss, mate, personally, because we're like at the moment, I would view this as like just having a quick look at this, right? We've come up here, we've taken out all of this, obviously, right? We've had this large impulsive move down. We've come back, we've corrected, we've mitigated something here, we've broken structure again, right? So I would be looking at this to potentially take out this, you know, looking at it. That looks pretty strong, but yeah, that's a big move down. But yeah, that would have been my thought. So at this point in time, I would have said this is pro 4-hour structure. So for me, I would have been more happier up here taking like lower time frame breaks and continuations, basically.
Okay, up to that liquidity to sweep that liquidity down there. Okay, yeah.
Yeah, something like that, mate. Yeah.
Okay, amazing. And I also had a question about like in terms of entries. I know I kind of asked a question to Albi last week about like his entries, because he was putting like 25-75% on his 1-minute order blocks to enter. He was trying that out. I just wanted to know if like Albi, if you had like if you had some data to just to prove or to disprove like whether you had more trades when you were entering in 25 or 75%, and if you were still like almost as profitable, or at least like more profitable than when you were entering 50%. Like, what was your data
I mean, obviously, I've only been doing it on EU, but what I've found is, you know, if it's a valid trade, the 25% gets hit on, you know, a standard buy to sell, sell to buy. The only time I'm using EQ is inside bars. But saying that, there's also occasions where a few inside bars have missed me. So for me, I kind of work with a 2-pip stop. As long as I can get that above the high or low, I'll enter at the open as well now. I'm still trying to gather the exact, you know, what I prefer. I mean, I prefer to be in the trade, if I'm honest. The ones that don't tag me sometimes don't always work. So, you know, again, I haven't got a definitive answer for it. But if you're getting missed on the EQ a lot, I'd say definitely, you know, test out the 25% because it does tag you in a hell of a lot more. And then, like I say, inside bars, I use the EQ, which again, sometimes don't always, you know, sometimes I found as well, if you've got an inside bar of a wick and the body's more present at the bottom of the candle, for instance, it might not come to the EQ of that. It will just come to the body. Like I'm going to do a dodgy drawing, but like if you've got, that's your inside bar, it will normally play off the open of the inside bar a lot of the time, I've noticed as well, rather than coming up to the EQ of this wick. And there's occasions where it may come up. So like I say, if your stop's, you know, protecting the high, just get in. Because if your trade idea is correct and you're in a continuation phase anyway, sometimes it won't pull back that aggressive anyway. So it's just better to get in the trade. As long as, like I say, as long as your stop's covering a high or low.
Okay. Yeah, that's amazing. And sometimes, like personally, what I do also, just maybe to share that, and maybe you can give your opinion about it, is that I when I enter in a trade, I try to give myself like 2-3 scenarios. What if I entered, like, for example, here, I'll just put it. So for example, like I would put my 50% here.
Yeah.
And what I would do is I either place that scenario where I would enter at the beginning of the OB, another one where I would be like just at the 50%.
Yeah.
And what I do is like, what makes me vulnerable in that position. So let's say if they were like major, let's say if there was like major liquidity here, and if it goes here, it would go up maybe against me. I try to see if I can get like 10R with whatever position I have. So like if I can get like a 10R with just at the entrance, like at the beginning of the 1 minute OB, then I'll be happy with it, like 10R. But if I'm not being able to get 10R here and I'll get it with the 50%, I'll more privilege the 10R because my goal is like 10R per day. But again, I don't know if that approach is good because it doesn't make me constant in choosing what I want to choose. But it's more like based on what makes me vulnerable in my position, what makes me vulnerable, like what could go against me.
Yeah, of course. I mean, any position, if you're holding it to 10R or more, you've got to expect pullbacks. You know, it's natural. It's not going to just fall out the sky. Obviously, you know, I always say you have to pay yourself. You know, don't get too carried away with holding a trade and thinking it can only go down or up. But like it all comes down to the level. You know, for me, when I'm in a continuation and I'm getting in lower and lower down the leg, I just take 1 to 5 because I'd rather get out, lock my profit in and go again. If I'm getting in at the top or bottom essentially of a supply or demand level, then I'll probably hold it to the higher time frame intention. What I would say is don't put too much emphasis on, you know, I want to get 10R, I've got to get 10R. You know, 10R is a lot, like even in a month, you know, it's a hell of a lot. Like we're blessed with the edge that we've got. We can, you know, make that very comfortably, but don't let that, you know, affect you. You know, you take some good trades. So just sort of back yourself and be confident in the approach. Like if you've got a higher time frame story built behind your trade, you know, for me personally, it will play out. You know, you just have to not sort of stare at it, not freak out. But at the same time, I'm a massive believer of pay yourself. You know, if the market gives you an opportunity, it's down to you to take it. So just make sure that you aren't giving back too much.
Yeah, and thank you, Albie. And just one last question, so I can be fair to everyone else, is that whenever I enter in a trade, I sometimes keep watching it, and it's annoying because I try to dissociate myself emotionally from it. Like, what do you do personally when you enter in a trade, even though it's like some 5R scalps, and it could take from 3 minutes to like 15 minutes sometimes?
Just walk away, go and make a drink. Like I think the worst part of entering a trade is the initial getting tagged in, right? Because you don't know what it's going to do. Is it going to react? Is it going to go through you? I normally go away, make a drink, do something else around the house for 5-10 minutes, come back, check where it is, and then I'll just set alerts, or I've got a TP. And my mindset now is I either win or lose. Like, that's it. I think if you're too emotionally attached to trades and you care about the outcome, you'll always have a problem in trading, because you need to literally be in the zone of, I don't care whether it wins or loses. You know, once you let emotion creep in, it'll just control you all the time. You need to say, like, I'm confident in my edge. You know, out of 10 trades, you've only got to be right, you know, 50% of the time, I know I'm right that much. So I'm all good. If you don't feel that comfortable, then I would say you need to sort of do a little bit more testing and reassurance of what you're doing.
Yeah, or reduce your risk to like 0.1%.
Yeah.
And you've got to get to the stage where as soon as you get into the trade, you can't get emotional or too emotional to say, because otherwise you'll just start making irrational decisions.
Yeah. Okay, that works. Thank you. Thank you very much, everyone.
No worries, dude.
Thank you.
Do we have anyone else?
Yeah, we have Precious.
Yeah. Hello, guys.
Hello, mate. All right.
Okay, let me try and share my screen. Okay. Okay. Can you guys see it?
Yes, mate.
Hello, guys. Hope everyone is okay.
All good, mate. Yourself?
Yeah, I'm good. I'm good. So my question is about the Asian session range.
Okay.
With the strategy, I'm actually okay with trading the strategy, but like I have some doubts and clarifications to make about the Asian session range. So I actually realized on the Discord, most people say they trade 2 hours before 2 hours before the London open. Like I think that's Frankfurt. Then the first 3 hours into the London kill zones. So yeah, I wanted to ask. Let me see if I can take it off. So this is the Asian session range here. So I actually marked these candles that brought in momentum and broke structures to the higher side. Is that how I should go about it?
What Asia is like the way I mean, I don't personally really use Asia anymore, mate. But right, with the Asia session range, what you're at normally, what we're more looking for is a sweep of, well, in this case, because you're bullish, you'd be looking for like a sweep of the lower, a sweep of some form of trend line liquidity. To be honest, Blackwatch is the boss with
Yeah,
Asia.
I was going to say, I don't use Asia, but I know Blackwatch does.
Yeah, so I mean, the one thing that we have to keep in mind when you're trading Asia is that the entire range itself is just liquidity. The highs have liquidity, the lows have liquidity, somewhere in the middle has liquidity. I know a lot of people will say they're trading the Asia sweep, quote unquote, but one thing you have to keep in mind is that that's kind of setting like a kind of a mindset that you probably don't want to have, because in theory, or I guess in practice, if price doesn't sweep the high or doesn't sweep the low, are you technically looking for entry, right? And the answer is probably not, but you should be. So like in this particular case, like what you're looking for is just basic liquidity built, swept, break of structure. So in this case, because this is your whole Asia range here, you're just looking for where's the liquidity, which to me, I would say here's equal lows. As soon as you get that sweep of the equals, you can see here that you get a clear break of structure. So the question is now, where's your entry? Now, everything else still comes into play, right? Higher time frame stuff. Like I only use Asia liquidity for continuations. And it typically happens to pair up with like 5-minute and 15-minute order blocks, I guess. But what you're looking for is basically like if you have like bullish continuation or just reaction off a 4-hour in like a higher time frame bullish trend like this, I would use Asia ranges to find continuations, more or less using market volume and momentum for Frankfurt Open, London Open, because that's kind of the best part about Asia is just the timing of it. So the whole idea is just use the liquidity within the Asia range. Once you get the sweep liquidity, look for a break of structure that you're comfortable with. Typically, you need to be a little bit more aggressive, potentially just a single 1-minute break of structure. And then once you get that, then you just trade with a higher time frame kind of order flow and go from there.
Okay. Thank you very much. Also, I'd like to share GU. I think something on the Asian session this morning on GU. Okay, can I get it? Okay, let me see. So yeah, this morning I had two entries here of the Asian session range. Let's see if I can get it. 1 minute. Oh yeah. So particularly like these two entries over here, and price swept the first one and quite didn't tap into the second one before like there was a runoff to the upside. And actually the zone was, I think, less than 4 pips. Yeah, 4 pips. So in this case, when I have like two candles that should I say like smaller time frame OBs that brought in momentum to the market, and they are not far off each other like this, should I like maybe like take the entry from up here, then like have a wider stop loss, or should just go with them like individually? I'm asking because like it didn't quite tap into this by just I think a pip.
It's kind of subjective. Honestly, I wouldn't have been looking for longs on GU today. I think the shorts would have been more in play if you scroll out a little bit further and look to the left. Like in theory, the long would have been a hedge into a short play, but what you actually have is you have liquidity built kind of above Asia, kind of within this range here, and you have bearish momentum coming from this. So kind of like how I was saying, I use Asia for continuations. I would have looked for entry kind of within this, if that makes sense.
Okay.
So like your entry here, I think is valid. You have equal lows basically here. The sweep. Yeah, you've got equals kind of along this line. The thing is that wick takes out most of that liquidity there. You have this, and then you have your break of structure. So yeah, I mean, personally, I would have looked to enter, here's that last kind of change of character, right? That break of structure. So my entry would have also been somewhere along this line here.
Okay, so the entry is valid.
I think so. I mean, the other thing is too, I guess it's within a range within here. But again, I would have been looking for shorts primarily.
Okay. You said you would have been looking for shorts. So because I think we've been ranging for quite a while now. So so because I was actually thinking of trading longs into this 4 and 1 hour like supply zones. So that means that was not valid.
I don't think it's invalid. I just think we swept liquidity and we started breaking structure to the downside. So I'm looking for just kind of those kind of continuations down because we have a lot of liquidity down here.
Okay. Yeah.
I mean, again, you could play it either way. It's just in my opinion, if I were to trade a long position just based on Asia liquidity alone, that would technically be counter trend, and the short play would have been my preferred play.
Okay, got that. And for you, Blackwatch, so when you say you're pro trend, you use the 4 hours, right? The 4 hour primarily, or like even the daily, like generally.
Mm-hmm. Yeah, so I mean, if you look at the 4 hour, you kind of have marked up here. If you go to the 4 hour real quick, I mean, it's
okay,
pretty much the same thing, but you know, we like you have here, we've tapped into higher time frame supply and we've broken structure to the upside, and we have forward demand, I guess. Yeah, there's that sell before the buy. So we got that reaction here. We've got price coming up to the highs. It's attempting to break the highs, but it's not doing it, right? It's failing. So it's just building liquidity here. You can see that wicket actually took out this liquidity, but again, it didn't close below this. So all of this is just liquidity for that expectational order flow. So right now, being in a complex pullback, there's liquidity to both the downside and the upside. So again, in theory, it should continue higher, kind of depending on what it's tapping into. I think is this a weekly? Yeah, weekly area. Well, it's already tapped into the weekly, so it's already been technically mitigated on the weekly. So, you know, in theory, again, pro trend for me, it is higher time frame bullish stuff. But in terms of just that Asia liquidity model, I would be looking for shorts.
Okay, thank you. That'll be all.
Okay. I think Evo or Ivo is next.
Yeah. See my screen, guys?
Yep.
Yes, mate.
Yeah, I wanted to start by thanking you all in the community, especially the coaches, for making sure that everybody has the best try at succeeding in the community. So hey, big kudos to you guys. You rock. You really do.
Appreciate that, man. Thanks.
You really do. So I wanted to ask some questions regarding the price action in EU today. And how to play stop loss, because for example, I took this trade as a winner because I detected this as the candle that broke this structure, and even though it was substructure, I believe that there was a lot of liquidity here, like a lot of remaining liquidity, and I placed like my stop loss like this. I don't know why. What's your guys' opinion on knowing where to place his stop loss exactly?
I'm not getting involved in this conversation.
Yeah. So for me personally, right, like as long as I can cover the low or the high of the candle that I'm playing, I'm happy. I normally don't go lower than 2 pips or 1.5. I don't go above 2. So as long as I can cover the low with sort of 2 pips, I'm happy to get involved, man.
Betsky. Also, when determining a trade, do you have like a mental framework of deciding if it's a high probability trade or low probability trade? Because when I'm trying to trade, I try to put a tag into the trade, like, yeah, this is an HPT because liquidity has just been taken or liquidity is about to be taken. And you could also frame like, yeah, this is a high probability trade because it comes from like a higher time frame order block and it's pro trend in the higher time frame. Do you also work in some sort of that mechanism on tagging low probability trades with high probability trades?
Yeah, for sure. I mean, my highest probability is obviously always pro trend. So I like to mark up, if I'm counter trend or pro, I let myself know, usually following 4-hour direction and then sort of the 15-minute. My highest probable ones are usually the ones that come into supply and demand and obviously give you that change in character. The lowest probability usually is, if they're coming into just like maybe a random 1 minute, in a leg that you're just sort of playing off, or you're getting high or low upper leg. I try not to have too many rules. I used to have this massive trade plan, and I'll be honest with you, it just stopped me taking trades. I try and like flow like water now, and just whatever it shows me, I just adapt to it. And from a lot of observation and obviously markups, I see, the same thing over and over. So I'm happy to take it. But obviously, yeah, the ones that work out best are usually the ones that are, I guess, tops and bottom, or the ones that are the initial reactions off. If you're going down a leg and you're getting lower and lower in the leg, or vice versa, you don't want to be taking those ones right at the bottom. They're normally the ones that burn you.
So really, you do use expectation on order flow more than you use liquidity to determine the probability, or like HPT or low PT.
Yeah, man, I try to follow the 4-hour direction and then, base it on, liquidity or supply and demand zone to target. And like I say, I like to see a change in character, and like I say, be with trend. Don't really play many risk entries or anything.
Gotcha. Okay, last question real quick over here. In the call, there was another phantomer that had like many supply zones coming on from like many different time frames, and I guess that's just refining order blocks from higher time frames. Do you have like a limit of the supply zones and demand zones that you actually do transpose from time frame to time frame? Like, for example, don't do our M1, just.
I mean, yeah, I try not to. I don't mark out every single M1. Obviously, I'm always using my time frames. I'm zooming out quite a lot, making sure, if I see price reacting off something and it's not in a zone, I always check like why, what was there. But I try and mark out like 5M and above. But again, I won't mark out every single 5-minute, 15-minute, 10-minute, 30-minute. For me, it's just too much. I like a clean chart. So I'll put maybe a box around them to the left, so I can't see them at the moment. And then I'll have the main ones, like the ones that I think hold the most weight. And then after that, if price is reacting, I'll look left, see where we are. And then depending on what we're doing, and if I'm happy, then I'll take it. But I find if you have too many boxes, right, the minute you come into a box, if it's, say it's red, it's a supply, the moment price reaches that, whether it's a 1 minute, a 1 second, or a 4-hour, all your brain tells you to do is, right, we've got to sell. And sometimes the sells aren't there. So I try not to mark out everything. I just think it gives you a bias, and sometimes a bias is not always a good thing. That's just me. Yeah.
Cool. Wow, that led me to think sometimes a bias is not a good thing. Okay, thank you very much.
No worries, mate.
Else we got Abhishek. Abhishek.
Yeah. Hello, can you hear me?
Yeah.
Yeah. So actually, I have one question for you, coaches. Yeah. Can you see my screen?
Yes.
Yeah. So basically, I was waiting for this trade to take, as it was. I saw this line as a 30 minutes OB open line, something around like this. Yeah. So at a 1 minute part of time, I saw this as a OB, and the reaction it got from outside and getting a boss over here.
So yeah, here as
yeah.
earlier,
So
mate.
but I didn't see this sort of OB. I don't know it is a valid OB or not, but I saw this valid OB, so I didn't put even 50% of that. I thought about giving a chance for the open, and I opened my trade, but it didn't get hit. So what might be the kind of, like, I don't know how it is. There any inducement is happening here or something? I don't know how didn't I get a yeah.
How do you know it's going to be this one?
Yeah. Right.
Okay, so like how I explained earlier, right? Like we come into this 5M thing over here. This actually mitigates like the extreme over to the left, right?
Yeah.
This little thing at the bottom, right? Then we get this, mitigates that, right?
Yeah.
Then we get this change of character. Just zoom in on it a little bit.
This one.
Yeah, just zoom in here. So then straight away you get this like change of character, sweep on liquidity. Like the trade that your idea is perfectly valid, right? And then we get this break of the high here, right? So here in this case, it came off this, which actually broke the high, right? This here.
Yeah. Sorry. I'm just changing. Sorry.
Yeah, this little OB here, right, didn't break any structure.
Okay, right? So that one red candle, we can call it as a supply flip or something. Supply to demand.
Yeah, exactly. Yeah, it's the this is really simple. This is just the OB that broke structure. Like here we get a break of the low, right? So we've got another valid high here because we have a break of the low here, right? So this is a lower high, right? We get a break of that lower high there. This is the OB that breaks structure, right? This doesn't break anything, right? Because this, like here, this doesn't close above this high here.
Okay.
Right?
Okay.
This one's already mitigated by this one, so it's going to be this
one. Okay. So yeah, because I was looking for this target, so
the target's good. Everything's good, mate. Like the idea is really, really valid, mate. It's just, you know, those little devil in the detail bits, you know, even if you want to take that higher one and cover the low of the lower one with your stop or whatever to protect it, you know.
Yeah. So one more question, like as a you term as a chucha, like chuch, what we pronounce, I don't know. So basically, is it like lower low and going higher and then going lower low and then
so
sort of that?
Yeah, so essentially here, right, we get a lower high, right? The lower high gets respected, right? So this is still not a high because it never closes above.
No, yeah, closed above.
So then because that breaks there, doesn't it? Yeah. So we get another lower high here, then we get a break, right? So we have a higher high, then we start breaking down. We get the first real lower high here, then we get another lower high here, then we get another lower high here, then we get the break of that lower high, so we can assume that we're going to see a higher low in the market.
Okay, yeah, so it is like sort of a liquidity sweep from these
exactly
equal lows.
Yeah, liquidity sweep, mitigation, change of character.
Breaking.
Yeah.
Yeah. So we can call this as a chuch, what we pronounce like CHO or CH.
Yeah.
Yeah. Okay. So one more last question, like while defining the OB, we have to see there should be an inducement like happening. So we can call these as a inducement. So we can just look for
potentially
this level to buy somewhere around.
Normally for me, like when I'm looking at inducement, I'm looking more at an area for a reversal, right? This isn't a reversal, this is a continuation, right? Because the higher time frame, the 15-minute at this point in time is trending, right? Everything at this point in time, I think apart from 1 hour is bullish, right? 15 minutes bullish,
yeah.
5 minutes bullish, 4 hours bullish, weeklies bullish, dailies bullish, etc. Right? So 1 hour, 1 minute goes bullish, right? So this is just a continuation, right? More a reversal is where you're looking for, you know, say you're coming into here, this here, right, has this level of inducement here, this little range here.
Sorry.
Right?
Okay. Yeah. This
This is the better reversal, basically, right? Because this sweeps highs, comes down, breaks structure, breaks very, very minor structure here. Then we get a break of structure here. So this is the lower high, right? We create this little doji. We have this little bit of inducement here. We come back up, we tap in, and we go to hell for a little bit.
Oh, okay. Because even I opened, I got my open place, the trade place here, and I was waiting for this to get into, you know, then later on I saw some sort of this reaction going around. So I closed my trade for this OB. Yeah, I didn't. So is what, like, is this the valid OB or not for?
Well, it's a valid OB. Gave a reaction, so it's valid, yes. But it's like what here essentially what I want to be probably ready. I mean, this is a bit late in the day. I think this is like 5-6 p.m. something like that, right?
Yeah.
Yeah. The timing also.
So it's a little bit like it's after sessions, which is never really the best time to trade. Again, this one for me isn't massively. It's definitely not the best OB, right? Because this is already the one that breaks structure. So this one is going to be less valid, right?
Okay.
And then, yeah, I don't know. It's an area of demand, yes, because you do get some form of reaction. That was a bit. There's some form of a reaction to it, right?
Yeah.
But here again, you have to come quite bearish to sort of start getting back here, right? We have to break a low. We have to break a low. We have to break reasonable structure over here. We have to break quite major structure over here, right? So better to start waiting for, like, again, a little change of character, which you do get here, right? You take this low, you take this high. So you could technically trade this, but then as soon as you see this reaction being poor, just go, okay, I'm going to get my risk off.
Yeah. We can just make a B over them, because I saw that.
Yeah, exactly.
15 minutes. Yeah. I somewhere saw this 15 minutes OB sort of thing here.
Yeah.
This. Yeah. So I was waiting for this reaction here at this candle, but it closed around like the way bearish candle. So I didn't took trade because I was looking for
even here, mate. You get a 15-minute change of character here, right? Like, just go back onto that, right? So here again, you take a low, you take a high, right? So you have a new demand zone in here. So it's just patience as well, mate. Like, if you go on 1 minute, that will be really, really clear. Okay, I guarantee you. Here you get a break of proper structure. You know what broke the first structure in here, something in here, so you can just trade that long.
Oh, yeah.
See what I mean?
Yeah, sure.
Again, it's not a good time to be trading because there's no volume in the market.
Yes. Even timing also matters a lot.
Yeah, mate, timing is one of the most important things.
Yeah. By the way, you're doing all a great job there.
Thank you very much, mate.
Being in the USD intraday, I was like watching the setups, markups, whoever I can, just learning a more bit of it.
No, thank you very much. Thank you. Appreciate that a lot.
Don't mind is that any bigger.
Thank you so much. Thank you.
No worries. I think that's it. No one else has got their hand up.
That is it.
Does anyone else reference DXY? No, mate. I don't look at DXY personally.
No, me either.
Is there any way I can make a quick question without needing to show anything?
Can I maybe quickly share my charts because I couldn't raise my hand because I joined from the browser just before we start the Q&A?
Yeah, fire away, mate. Can you let's just do that first, Tatiana, and get all the charts out there and then you can ask a question, yeah?
Sure, no problem.
Okay, can you already see?
Yep.
Yes, mate.
So I was wondering here in this area, so we are we're coming up here, we had this like changing character around this area, and then I saw this range here that basically took out this reaction from all over there. So this was my first proper entry, so to say. And then I figured now we're just gonna rally off. So I looked at this as a flip. So I had this reaction marked probably to this inside bar. And then price came back, failed to put in a low, and then was taken out with quite some momentum. So I had this little bar as a flip. Is it like incorrect or wrong, or was it just bad luck and part of the probabilities?
Makes sense.
It makes sense. Yeah, the little equals there above that OB would always.
Yeah, this one, right? I saw that in hindsight only.
Exactly. Yeah, that would. The fact that OB isn't mitigated as well will put me off a bit, because that's essentially the FU here, right? Like this. I've lost. I can't draw anymore.
Huh?
Draw. Okay. But yeah, this essentially ran the low over there, right? It doesn't really break structure, but it would always. What I would probably be doing in this case, right, is playing like a smaller or another reaction off of this higher level that you've got marked, and then have a limit on the lower level, personally.
Okay. But it's just sometimes if we rally off, it would have probably taken up from this one and then.
I was going to say, just quickly as well, like for me, I mean, like would 2 pips have covered the low?
I don't think so.
Just because like with that wick, seeing that wick, I can't draw. I don't know why it won't let me draw. That little wick, I would have probably made the wick, and then I would have had my stop on the below that low.
Okay.
Because like for me, I just go 2 pips. If I can get it below that low, I'm sweet. So I would have been essentially all right. But like Sam said, with those little equals, there's times where there's times where it won't touch them and it will continue showing bullish order flow, and there's times where it will. So if you can have your stop below the actual low of that candle to the left, realistically, when you're seeing that bullish order flow, they shouldn't allow price below that, because it would obviously result in them losing. So as long as your stop's there, you should be safe. That's where I like 2 pips. Obviously, Sam likes 0.1.
Yeah, got it. And with these reactions, do I need to be able to identify the supply in this case, or can I just say, okay, I see that we wick here, so I assume there is some form of supply in here? I mean, in this case, we see the inside bar, but in some other cases, we might not see anything. Is that valid? Is it still a flip then? Or is it like a lower probability?
I would always want a supply or demand level.
It needs to react to a supply or demand zone.
Okay. And then just another one real quick up here. So we came into this higher time from supply, and then I had the first change of, there wasn't a change of character. We tapped into this demand, basically failed to put in a higher high, and then I figured, okay, now we taken out this reaction here. So I tried to enter short here, and then it didn't work, obviously. So my question is, did I miss something here? And then I figured, okay, now the shorts failed basically. And then we.
What time is that? That's you're on
1 minute.
No. Like the time of day. I think that's London. Wow.
It's 1 hour shifted. It's like it's out of the session actually. I just marked it up from understanding. It's 11:30 your time.
Yeah. So that's initially a problem. You're in that like low volume time. The high doesn't exactly turn around quickly there either. You don't actually get a change of character there either, right?
No, it's a flip now.
Yeah, but there's been no change of character really. So I don't.
Higher time frame mitigation paired with the change of character. You see how to the right it actually gives that change of character, and that one does run.
Here.
Yeah, I can't draw. I don't know why I can't draw.
It's really annoying, isn't it?
Yeah, I think I joined from the browser. Sorry, guys.
You are?
Yeah, I joined from the browser. I didn't actually download Zoom. I just joined from the browser, so that's why. That's why I couldn't raise my hand either. But I see what you mean with the change of character. So you, in these cases, you wouldn't say, okay, now we got the flip, so I can enter, but you would really wait for change of character.
Yeah, because you're going against the trend on just a little flip on the 1M, whereas when you've got the change of character paired with a flip, it gives a lot more sort of higher probability, along with the higher time frame mitigation, that you can play shorts back into the discount for that 5M mitigation for then the longs.
Okay, got it. And then the last question: when would you consider these higher time frame levels as failed and look for longs basically to continue with longs. So my question is, when do you start looking for a change of character to go short, and when do you say, okay, now this higher time frame is failed, now I continue with longs basically?
So I'd always favor the longs just personally because we're bullish, right? So I'm more interested in essentially pulling back, coming into the 5M and then continuing, you know, in the overall direction. The higher time frame mitigation, once it gives a change of character, you know, for me, I'll get involved if I think if I want to play it. We just have to remember when you're playing that counter trend, essentially, you don't have to be playing counter trend. You can just wait for the pro trend, which is obviously a lot safer.
Okay, got it. Okay. Nice. Thanks a lot, guys.
No worries, mate.
Yeah, Tatiana, you had a question.
Yeah.
Yeah, it's just a quick one. Thank you very much. So when you're really in doubt about two or the blocks, like because those seems pretty valid, pretty strong, do you, well, I hope you sometimes doubt between two or the blocks. If don't, you can't answer my question, but anyway, do you put like two limit orders, or
I personally play a reaction to the first one and then the limit on the one underneath or above. I'm pretty sure Sam does the same. Yeah. So like if we say we come into the, you know, the first one and it gives us a change of character on that one, I will play that one, you know, long or short. If it goes straight through it, then my limit's on the one underneath to get tagged in essentially at the extreme. Does that make sense?
Perfect. Thank you. Yeah, awesome.
No worries.
Thank you very much.
Hey guys.
Hello, mate.
Is it all right if I ask like one more question, like on my chart real quick? Like it won't be too long.
Yeah, sure. I think there wasn't anyone else in front, was there?
No.
Yeah, I don't think there's anyone else. That's why.
Yeah.
Or is there?
Let's do you, and then we'll do that last guy quickly. We're good.
All right, for sure. I'm gonna make it quick. All right, so this is what I was looking at on the daily. Hold on, give me a second. Y'all see my screen?
Yes, mate.
Okay, so we broke the daily swing high right here, right? So I was expecting some retracement.
Wait, zoom
so
out.
when I went to the
again and zoom out quickly, mate, for me.
daily, give me a second.
Yeah, just go on daily because I don't think that's a swing high, really. From what I remember from cable structure, I don't actually know. No, does it, like, go make this whole area visible, this whole thing, like just press it a little bit. Yeah, so if we're looking here, we have this is the swing high. Really, these like because here just go down a little bit. This looks to be trapped like this is the swing low down here, right? And this.
You want me to go to the weekly?
No, yeah, go to weekly quickly.
All right.
So yeah, now go down a little bit, right? So if we're looking at daily, like the daily swing low would probably be this, right? And this.
Yeah.
Right? This is the swing high. This is a swing low. We're stuck in a massive fucking range.
Oh, okay. I see. Yeah, because when I saw that, look, give me 1 second. Basically, I mean, I guess I didn't keep this in mind, but I thought, you know, when I saw this, we're gonna get some retracement, which is normal, right? Or I mean,
well, yeah, we broke it and we had a retracement. But here, we broke it. We had a retracement. We had a continuation.
yeah. So basically, when I was in price action, I think it was around this area.
Yeah.
So it got to this day. Let me go to the 15-minute because in the 1 hour, I could tell, well, we didn't get a higher high. So that's what made this BOS invalid, right?
Yeah.
But that's the thing. Price kept breaking down. So when I was on the 15, where is it at? Okay. On this day, price kept breaking 15-minute structure.
Yeah.
So let me put my annotations back on. It's kind of messy, but let me see. So when it got to this point right here, I'm gonna tell you where specifically. When this low got broken, right here.
Yeah.
I was looking for sales at this area. So when I broke it down, I was looking for the inducement, right, which were these equal highs, and in this area right here. But then I noticed that this area didn't even get mitigated, like even if you go to the 3-minute.
Yeah.
See, and I was just kind of curious, like why, like,
what
did that happen or like?
You mean that missed this order block basically? Did it tap the 5-minute?
me go to 5 minutes. Yeah, I was looking more at this one right here.
Did that tap it or not? Did it miss it?
Let me see. Look, let me put the horizontal on it.
No, go to the wick quickly.
This one?
No, this wick here.
Oh, okay. Let's see.
Oh no, I mean cable does weird shit. It's why I don't trade it. But yeah, this it does, man. It reacts to weird shit like this. It's got.
But
no,
this is pretty bad at like to look at this area, right? Would you say?
Yeah, mate. Like the 15-minute doji is a fucking giveaway there, mate. This area runs highs, break structure. It's a pro trend move. Like this has everything good about it. Literally.
Yeah. And what about this area right here? Like this was like right before the BOS of the 15-minute low. So this wouldn't be valid, right? Because
it might be valid for a continuation, right? Like more a continuation rather than a pullback to mitigation to heavier continuation. This is more like, in and out, right? Whereas this is more, like pro trend, let's hold that for a 1 to 20 or something,
Yeah, but did y'all kind of like understand like the concept of like basically what I was
What it
trying to
missed,
ask?
it didn't mitigate this, because it's cable. It does fucking weird shit, mate.
Yes.
I know.
That's literally it.
There was an entry here though, so
Yeah, for sure. Yeah, no, and that's the thing, right? Sometimes if it misses the mitigation, you can just say, okay, well, it's mitigate the higher time frame thing, and it's broken structure again. So next continuation.
yeah. Okay. I appreciate that, man. Yeah, that's my only question. So man, thank y'all.
No worries, man. Thank you.
There was one other guy, but he's gone now.
All right, should we wrap that up at an hour and a half then? Because yeah.
Yeah.
I have a question.
Oh.
Okay. Whoever that is.
Yeah. Hello?
No.
Someone
Who said that? Who's there?
Who said it?
Someone said I have a question. I heard that as well, mate. I'm not going mental.
No, I'm sitting here thinking, what? Someone's on a wind up.
Yeah, I think it's Aaron,
Hensley, I reckon.
Yeah.
Okay.
All right then, well.
Yeah, cool
I have
guys.
a question, guys.
Oh.
I have a question.
Yeah, okay, mate. Like we'll do this as the last one, guys, because we're going quite over. It'll be a long video.
Can you hear me?
Yes.
Right.
All right, thanks so much. You guys are wonderful. Thanks for the support thus far.
Thank you, mate.
Yeah. I'm actually new. I joined May 15. I am actually getting things up. Quickly regarding London and New York session. I'm from Nigeria, so London session I think start from 8 o'clock, 8 a.m. If I'm correct.
No, I wouldn't know what time.
On the trading view, it is 7 a.m. That's the starting of.
Well, yeah, but it depends what time zone your trading view is on.
Yeah, that's 7. So that we have to take trade, reliable trade, like how many hours from then?
Normally, like for me, the best trades come from like 7 a.m. GMT to sort of 9 a.m. GMT, and then from sort of 1 o'clock or 1 p.m. GMT to sort of 4 p.m. GMT. That's when I'm most likely actually looking at the market and looking to trade it.
Yeah, same.
Okay, so 2 hours for.
Yeah,
2
2 hours for London, 3
London,
hours for Europe.
then 3 hours for New York. All right, thank you very much. Yeah, thank you.
No worries, man.
Cheers, mate.
Yeah.
Hey guys, am I late for a quick question?
Yeah, we could do the last one then, and we'll wrap it up after this.
Oh, no problem. If he was the last one, I say it the next call. No problem, guys. Sorry.
That's all right, it's fine. No, go on, it's fine.
Carry on, mate.
Far away. I'm just saying you're the last one after this. Go on.
Oh, okay. Thank you. Just a second. I'm sharing my screen. Can you see my screen, guys?
Yes, mate.
Yes, mate.
Okay. So in gold, we are in a bullish trend as we tapped in a weekly zone. Just a second here. But my question is here. we got this breakout structure, quite strong breakout structure, and we have this 1 hour order block. I'm waiting to the price to come back here. So we have a lot of liquidity here built. But if I'm looking to the 2 hour order block, it was already mitigated here. So the question is, am I waiting for nothing, or this zone is still valid, this 1 hour zone?
I don't really know gold that well.
No, I don't know it well enough to. I know for me, like if it was another pair, I wouldn't class it as completely done until EQ or the zone's wiped out, because you could have you can have like sort of 2 pushes into a zone, so you can tap the open and play off the open, and then you can come in and sort of mitigate the EQ and continue. For me, it's definitely there. It's valid, but I don't know if gold comes back to those sort of things. It's not something I trade personally. There's a 1 hour order block there. You can see it. It caused the break structure.
Yeah, exactly. Like it's definitely a valid area, mate. It might get mitigated now. It might get mitigated in future. We're never going to know, right? Like,
yeah.
At the moment, price seems to be struggling to put in highs and creating liquidity. So I'd say, I don't know, equal highs as well. I'd half be expecting that. It's creating higher low. I don't know. That's a bit of a weird one, mate. That's a horrible fucking range as well.
Yeah, it's really bad.
I'd probably be looking to sell it as well, to be honest, mate. But I wouldn't really want to do anything. I'd like in this case, I would personally just wait for another break of structure, and then trade that, because this price action does absolutely nothing for me.
Perfect. Thank you, guys. Thank you very much.
Hey, real quick, one thing that you can do, because you are in a bullish range, you have that swing high, swing low, kind of as you have marked up. Where's my annotate tool? Swing high, swing low, bullish expectation order flow is for continued higher prices with liquidity to the downside. It is all the same. Liquidity concepts and expectational order flow on gold is the same. Whether or not this will get tapped into is debatable, because what it may end up doing is just take out this liquidity. And while it's making that bearish structure, it may shift and start making the bullish structure. And the other thing to kind of keep an eye on is that whenever you kind of get like this retail kind of wedge pattern, right? It's always good to basically expect the expectation order flow to play out, play the liquidity to the downside as a hedge position potentially, and then long afterwards. So it's something like I like to say, if you go to the 5 minute real quick.
Yeah. There we are.
There's this thing that I've been playing around with. Now I don't have a ton of data on, so trade at your own risk. But it's basically I call it hedge the wedge. It's basically you basically have liquidity on both sides, right? We're playing the higher time frame expectation for higher prices, but we know for the most part that this is going. I would assume that this is going to get ripped out. But again, just trade structure, trade what you see. If you do get a push to the downside, understand that there's a good chance that that's a sweep of liquidity before price continuing to the upside. So what I like to do is hedge the wedge as it kind of comes into like a point like this. Usually at some point it will take out liquidity first and then run. So just keep an eye on that,
Perfect. Thank you very much. Thank you very much, guys.
No worries, man.
No worries, mate. Right.
Yeah. Cool, guys.
We'll call it a day there. Appreciate you all joining, hopping on. It will be probably on the website, I would imagine, late this evening or tomorrow, for those of you if you want to watch it back.
Yeah.
I'm going to hit stop.
Appreciate you guys, man.
No worries.
Thank you so much.
Thank you.
Guys.
Take it easy, guys. Peace and love.
Guys.
Later, Waffle House.